This is the most vicious, backbiting, stock-picking show on television. It's called Share Shootout. I'm Bruce Whitfield. This is CNBC Africa, first in business worldwide. What does the C in IEC stand for? Don't brokers and salesmen usually get that? And what's all this talk about spy tapes? Spy tapes, shouldn't the real question be, what tapes? What do those questions have to do with the show? Well, absolutely nothing. They're my producer's futile attempts at getting a writing gig for Trevor Noah. Well, introducing tonight's stock pickers, fresh from holiday in Mauritius, where he got to swim with the dolphins, or as he likes to put it, where the dolphins got a chance to swim with him. He's got 7 appearances, 4 wins and 3 losses. Sasha, there's nothing fishy about me, Narishkin from Best Act, and with 5 appearances, 3 wins and 2 losses. Nick, I've had a week's worth of sleep because my baby was on holiday in the Karoo. Norman Smith from Lentus Asset Management. Over the next 30 minutes, both of our stock pickers will fight it out for the title of Share Shootout King. The loser will be crowned Share Shootout Princess and be sent out into the ether. Both of our guests have pre-picked 3 shares. Neither knows what the other holds, but each must accept at least one of their competitors' stocks. And the longer they leave it, the more likely they are to have something they really don't like that they have to choose. Each has got 30 seconds to argue their stock pick. So the house rules are set. You're both here. You're fresh back from holiday. He's had a whole week of sleep. I don't know who's in better condition to start off with. Why don't we start with you, Nick Norman Smith, because you're top of my list. Now, this is a share, your first pick this evening, which is at record levels. The last time I looked at it, it was trading at 860 and headed very firmly for 900 Rand a share. I happen to know it's one of his favorites. You're shorting Naspers. In 30 seconds, tell me why.
This is a fantastic company. They should change the ticker from Naspers to Tencent because that's what it is. It's 85% of the value is a Chinese internet stock, which has exciting growth potential, but the downside risk is just too high. On 39 times earnings for Naspers and underlying 37 times earnings for Tencent, this is a recipe for disaster. If you look back in the early 2000s, there were businesses like Microsoft, Intel, Cisco, traded record levels like this. They did brilliantly over 10 years. 4 times larger earnings than they had 10 years ago, and as an investor, you're actually still down because it was just too expensive.
Your 30 seconds on Tencent are done. Right, Sasha Narishkin, I happen to know that you like this one a lot, that you believe that this is going to 1,000 Rand a share, well, not within days, but perhaps within weeks. He's shorting us, perhaps.
You can't put words into my mouth, say within weeks. I think, yeah, I mean, Nick makes a good point, but what's different this time around from the last time?
Those famous last words. What's different
just to remind me how much money those businesses were making back in the dot-com era. Nothing.
Absolutely. Microsoft and Intel were making significant profits.
Infinite PEs, or they were trading at bigger levels, probably because there was a hardware revolution that we all had to adopt. Now, to some extent, there's a social media revolution of some sorts. And even people are willing to give, I think, also against the backdrop of the Tencent thing, was Facebook results which were pretty well received by the market. Look, there are always risks with every business. I mean, the big risk for Tencent is to say, well, what happens if there's liberalization in the Chinese internet space?
Odds are pretty, not that high.
I wouldn't say for the next 5 years. No. But also, at the back end of that Tencent business, you know, Chris Becker already speaks of the television business as being kind of extinct. You know, I don't know what the people at Randburg are thinking of that, but, you know, he certainly has got vision, and he's been able to replicate in the developing world.
But you're telling me lots of nice stories that we know already.
So next to that, a problem is valuation.
He's telling me at 860 bucks a share, it is massively overvalued. This is a crash waiting to happen. I happen to know that you like the story for all of those reasons that you were giving a moment ago. Tell me why we should be going long on Naspers and not short.
Well, it depends where you bought them.
No, but if you're at 860 bucks.
Okay, so his point is well made. At 860 bucks, he'd be putting in a short at these levels. I think you get the rest of the business for basically nothing. And why should I dispute what Hong Kong investors are willing to pay for what is a growth business in China?
So you're shooting down his short.
Yes, I have to.
You're shooting down his short. Would you be buying fresh Naspers shares at 860 bucks though?
Well, yes, we've been adding to some of our existing positions.
How mad is he?
Look, I just think the odds are really against you, and you're paying this kind of valuation. The story may come through, but you know, investing is an odds game, and if you look at over history, if you've paid these kind of multiples for businesses, you've generally done quite poorly. So answering that earlier question, companies like Microsoft, Intel, Cisco, Oracle, they were making bucket loads of cash 10 years ago, but just the market had priced in too much. So I'm not talking about a pets.com and all that rubbish on infinite multiples. These were proper businesses that have now literally multiple 4 to 5 times multiple increases in their bottom lines. It's just the world was expecting way too much, and there are a number of risks there.
Is it possible that this time it may very well be different?
It may be, but as you mentioned, those are the 4 most dangerous words in investing, and certainly I'm not going to bet on it being different this time.
I thought it was Nobel laureate. Those were some of the most.
No. Let's be nice. Okay, you're shooting it down.
Yes.
Okay, short on Naspers, shot down. Don't take it personally. It's the way the game is played. However, what we do take personally is Sasha Narishkin's dress sense on this show. Very often he seems to go to the second-hand shop to get his clothing, but he's just back from Mauritius and he's looked like he's been to the factory shops, and he's done rather well with a very fetching blue jumper this evening. So well done to you, Sasha, on that particular
Thanks,
point.
Bruce. Thanks.
And also, being a dedicated follower of fashion, you know a lot about the fashion shares. So in 30 seconds, please tell me why you would follow Foschini.
Well, I think it's been oversold relative to the rest of the market. Now, I understand where those concerns come from. They're in large part due to the gearing, and I'm talking about people buying fashion on credit. But I think they've managed that pretty well. I think there'll be an unbundling of RCS, as they indicated, not now, but it will come. So that's their growing commitment to be able to downsize it. I think across some of their other products, they're growing at double digits. And I think just on this multiple with a forward yield of 5.5%, it's probably too cheap at these prices.
30 seconds. I just saw in the Truworths results recently that just the level of bad debts going up in those credit books, up something like 30 or 40%. That's a huge increase. They're not losing control of their credit books, but these guys are feeling the micro-lending pain that sector's feeling at the moment, Nick.
Yeah, there are clearly some concerns, and this is a sector that's obviously done phenomenally well. Is it sustainable? Probably not. But what is quite interesting is there is quite a divergence in valuations. So you've got a Foschini or a JD Group, which are actually looking relatively attractive, and then you've got your ShopRites and your Massmarts, which are looking very expensive. So history has also shown that you can actually buy stocks in an expensive sector. If you buy the most attractively priced ones, you can still actually do well. So whilst it feels a bit uncomfortable, and Foschini probably wouldn't be my pick, on balance probabilities, I actually don't mind it.
You don't mind it. He doesn't mind it. That's nice, isn't it? But aren't you concerned, though, that this credit cycle is negative? It's negative for anybody who sells anything on credit. It's negative for the micro-lenders. It's negative for these clothing retailers. It's negative for the furniture retailers over the next 2 or 3 years.
Bruce, and you've always held this view, and you've been very forthcoming in this view, that selling anything on credit is bad. So, I think you have to air your laundry here too on this one. But you're probably...
The point is, I get to ask the questions and give the opinions. You get to answer them.
I know. I feel like the naughty school kid, the headmaster.
Okay, well, we could do that afterwards.
I think Nick's point about valuations is probably well-founded, because that's why I've put it forward as saying maybe it's oversold, and that's already baked in the cake. So I think a very well-run group. Probably my only criticism is that they got too many brands that are kind of replicate themselves. But I think the valuations are probably too much to ignore. And that dividend yield in a world of
5 times.
5.5%. Yeah.
5.5%. It's a good dividend.
You'll struggle to go and find a company of this sort of quality. And I think the other thing is they're probably at $2 billion, maybe on a fairly cheap multiple. Who knows? You could be sniffing around.
Okay, interesting thought on that one, Nick Norman-Smith. But here we got a 5.5% dividend yield, 11 times multiple. It's not your favorite in the sector, but you'll take it. You'll accept it.
Yeah.
What would your favorite in that sector be?
JD Group.
So JD Group, okay.
Yeah, that's on a 6-7% yield. Trading below book. So once again, probably not as the market certainly doesn't love it, and it hasn't done as well, and it isn't as well managed. But just from a pricing perspective, that once again the odds are in your favour.
Okay, he prefers JD Group, but he'll take your Foschini. He likes your jumper. Right, Hosken Consolidated Investments. Now this is an interesting business with lots of fingers and lots of different pies. Tell me in 30 seconds why, Nick Norman-Smith from Lentis Asset Management, you like this one.
So this is an investment holding company, unlike Naspers really. The difference is you're getting it a lot cheaper. So it's 2 major assets. So it's Soho Sun, which owns hotels and casinos, great businesses, quite a low point in the cycle. And ETV, what a great business. I mean, all I have to say is ANN7, that's the kind of competition and SABC that they're going for. So they've got the market captured in free-to-air television. And also really good management team, history of strong capital allocation. And they've got a number of other small exciting businesses which you're essentially getting for free and not paying a premium multiple.
Don't you love it when trade unionists become capitalists? And it was absolutely remarkable transformation. But here's a business where, I mean, you talk about Tsogo's son, of course, Graham Wood, the managing director of the Southern Sun business, stepping down last week, a bit of a management shake-up, positive or negative?
Trying to make these management calls, quite frankly, I prefer to buy the good businesses and let the rest take care of itself. I mean, I'd obviously want a good manager, but if you're buying a great business with iffy management, as we saw with Microsoft last week, with Steve Ballmer stepping down, you can actually get a share price uplift. So I'd look at the business first and then hope I get some decent management. So I think there are enough strong shareholders in there to get the right people in there. So I'm kind of neutral.
How much do they earn? Is it 36 and a bit percent, or nearly 37?
Yeah, you'll have to ask him. Don't ask me.
Yeah, it's somewhere in there. So.
But you like the HCI business?
I do. Intrinsically, I don't really like gambling because I think there's going to be more government pressure. But I like HCI.
Why would there be government pressure on gambling, which is a wonderful resource?
So you've got a problem with the credit, but you don't have a problem with gambling.
Oh, for goodness sake. Gee, so why are you picking a fight? I've just come back from the Transkei. You know, I've come back, you went to Mauritius, I went to the Transkei on holiday. You know how chilled the Transkei is. Not even the hardy-dar squawk in the Transkei. That's how chilled it is. So stop picking fights with me. Now, should we take this outside? Sorry, Nick's embarrassed.
No, but I like HCI as a business.
But how can you trust former communists to run a business properly?
Because, as you say, Narushkin, as you say, Bruce, there's a capitalist inside us everywhere, and making money, nothing like good old-fashioned money to steer us in that direction.
But it's a nice collection of really well-run businesses, really solid businesses. The e-news business is a good one. They're looking to go free to air with 20 channels, launching their own satellite channel as well on a free to air basis.
Some HD channels there too.
So there is really nice progress being made there. They're quite private. They're quite secretive. They don't go very public with what they do. Is that always a good thing?
I don't know. I think as a shareholder, you've got to trust your management team. So I think in this case, you've got to say, I'm buying into a management being able to create value over an extended period of time.
And that's more important with the company like this that is deploying and redeploying capital. You don't want them to destroy value. Every CEO redeploys capital, but in this case, it is very important. So you're not paying a premium for what are probably some of the most astute deal makers in the country, and they own 17% of the company.
Okay, no, it's a fabulous story, and HCI gets your big thumbs up.
But can I add one thing about the ETV business and why I think it's different to DSTV? It's all about sport and live TV, which you can't watch delayed.
Yeah,
those two things are very, very key. And Naspers, for the time being, has that market cornered.
It most certainly does. Okay, so big thumbs up then for HCI. Let's see where you're going then next, Sasha Narishkin, with a very bold pick, and a company smaller than 5 billion rand in market capitalization. Already, Nick Norman-Smith is getting nervous and twitchy at the prospect because he doesn't like the little companies. Mixed Telematics in 30 seconds.
Mixed Telematics. Okay, it's about global fleet management, and they're coming with more interesting applications, interestingly on iPads, iPhones, and all of this is about fuel efficiency. So in a high-cost world, you're trying to bring costs down. They've just done a successful ADR program, which has managed to raise them some money, and some interesting, significant shareholders there. So whilst it looks even more stretched at these levels, these record high levels, I think it warrants it with its growth prospects.
There we go, 30 seconds, exactly. Well done. That's the first time ever. Nick Norman-Smith, do you like Mixed Telematics?
Look, after the share price rally, probably even less so. But obviously, this is technology, and technology is highly competitive space. So you've got a lot of the cell phone networks are getting into this telematics and leveraging a lot stronger, bigger infrastructure. So a lot of competition. Do they really have entrenched barriers to entry? I'm not convinced. So I'm a little bit concerned that someone could come in and eat their lunch. Interestingly, the very clever guys at Remgro sold out of their vehicle tracking business. So there's an indicator of what some really smart people are doing.
Okay, really smart people are selling out of the business, and you want to buy into it, Sasha?
Well, Imperial bought a 17% stake. I wouldn't say they're too stupid, but there's some really smart people too. I think what they have on their side is first mover advantaged in some developing markets, which are still undersaturated, and early stages making good inroads in their developed markets business. You know, everybody laughed at their European and their British and their US business and said, oh, it wouldn't work, and suddenly it is working. So they certainly do bring something new and fresh. Perhaps it's pricing, perhaps that's a problem from a margins point of view going ahead. But I think because they still have size or lack thereof on their side, I think that's a net positive for them.
Size?
Yeah, I think you actually want to be really big in this case, because it is all about the network effect and having all of your customers and building that network out. So, you know, I'd probably prefer one of the bigger players in that space. As I say, I think you can probably get better pricing on a cell phone network or someone like that.
Do I smell gun oil? You're shooting it down.
I'm shooting it down.
You're shooting it down. Sorry about the bun, Sasha. I liked it.
That's how the game works.
Exactly, that's how the game works. I wish there was a bit more fisticuffs, but we'll get into fisticuffs, because next I look at the stock pick of Nick Norman-Smith. It's a one-time favourite of Sasha Narishkin's, so that's interesting. And I think you might like Sasha Narishkin's next pick as well. So it's going to be interesting to see how this next battle goes. It's a survival of the fittest. Who will stay, who will go? We'll refresh your memory just quickly before we do go. Nick Norman-Smith, a short on Naspers. Sasha Narishkin thinks that's laughable. He wouldn't short Naspers if you paid him to. HCI, he likes a good long position on HCI. HCI, a good solid pick on a multiple of 15 times. And then Sasha's picks, Foschini, not the ideal retail sector pick, says Nick Norman-Smith, but Foschini, he'll accept it. He went long on Foschini. Mixed Telematics, however, Nick Norman-Smith is laughing deep inside his belly. All of that coming up and more in just a moment.